of East Tennessee, this is 10 News Weekend.
Well, welcome back. Many global stock markets are approaching bear market territory, meaning a decline of about 20%. Volatility, as measured by the VIX index, is at its highest level in the last 5 years. So people are a little bit worried, but are you? And should you be? Well, certified financial planner Paul Fain has 3 things to focus on during crazy markets. So Paul, let's just kind of recap for everybody the recent stock market damage and how bad is it really?
Well, Leslie, it's not bringing much Christmas cheer.
Oh no, grinchy market.
It's a grinchy stock market this year. So since a high point about 3 months ago, the very familiar Dow Jones Industrial Average of 30 big U.S. companies is off about 13%. So that over 10% is a market correction. The Nasdaq, which a lot of people follow because it's got a lot of technology stocks in it, is approaching bear market territory, off about 18%. Foreign stocks are down about 13%, so they're in correction territory. So not a lot of fun in Stockville.
Well, what is kind of the cause behind all of this?
Well, it's a lot of factors moving around. You've got a slowing economy. You've got the Federal Reserve raising rates, which makes it a little more expensive to borrow. We've got the ongoing trade tensions with China. The United Kingdom's in the news again with their decision whether or not to stay in the European Union. And oil prices have been, very volatile in recent years. So just a lot of uncertainty and gets us worked up.
All right, so it's a little scary, right? So what are some ways we can kind of tune out all the noise and just remain calm?
Try to remain calm.
Try to remain calm.
Well, I think perspective, Leslie, goes a long way, or at least it should, because, over long periods of time, the stock market goes up a lot more than it goes down. A diversified portfolio may sound kind of vanilla during the excitement of holiday eating sweet treats, but it's a great tool to prepare you for weak or declining markets, but also to be poised and ready for markets recovery. Most markets recover in plus or minus less, 12 months. So taking that perspective of diversification is important. Short-term factors are short-term factors. Politics, economic news, things that get us all worked up. It's just short-term drama.
It can change quickly.
It can change quickly, and it does. You're right.
And now we have Christmas in 2 days, but a lot of people are looking ahead. The new year is coming up.
Yes.
So kind of what are your thoughts about 2019?
I wish I could paint a rosier picture, but it could be more of the same in 2019 that we're having this year, because these factors are going to follow us into 2019. So, I think it's important to be disciplined, develop an investment plan that you can weather through highs and lows. Play a little defense. I think it was Pat Summitt said defense wins championships. Money that you're going to need to spend in the coming years, have it in the bank or short-term conservative bonds. Be long-term with your focus, and we'll leave our viewers with this, Leslie. Why don't we check the value of our home every day? Why do we check the value of our investments every day and get ourselves, all worked up in a tizzy? We know over time when we invest in a house, it's going to go up in value. And I would have that same confidence in your investment portfolios. Over time, they're going to go up in value.
Well, great tips. Thank you so much.
Hope so.
As always, Paul. We
Merry
appreciate
Christmas.
it.